Okay, good afternoon, everyone. This is a quick session on naming of ledgers. So we are going to just get right into it. All right. So the first thing that we want to remember is what is a ledger? And it says here that a ledger is a collection of accounts that are recorded using the double entry system of recording, which are placed in a trial balance and are later used to prepare final accounts. So our focus today is on naming our accounts because we are going to be using this step when we are utilizing the double entry system of accounting to prepare our ledger. So let us look at the explanation for double entry system. So it says here that the double entry system of accounting is used to show that when a business conducts a transaction, an exchange is taking place. For example, when a business owner sells goods, they receive cash in exchange for those goods. Example 2 says, when a business rents a building, they pay cash in exchange for the use of that building. So we see what is taking place here. For each transaction, there is an exchange process that is taking place. We are now looking at the number of accounts for each transaction. So it says here that you should have at least two accounts for each transaction. For example, take May 1. Let us look at May 1. We paid rent with cash. Two accounts are affected, rent and cash, right? Your two accounts are rent and cash. You rent the building, and for the use of that building, you're going to be paying cash, right? So you've got the building to use and you're paying cash. The next one says May 5th, sold goods for check, right? Your two accounts affected now would be sales. Sold is referred to as sales when you're preparing the ledgers, and check is referred to as bank. The reason why check is referred to as bank is because you have to take the check to the bank, all right? So we have some more examples that we are gonna go through individually. The first set is from January 1 to 6, and then the other set is going to go from the 7th to the 16th. So let us get started. So for January 1, it said we started the business with $100,000 checked. So if we started the business with $100 checked, the money that we use to start the business is always called capital, right? And check is referred to as bank. So that is our first two account, all right? Then we go on to January 2. It says cash sales simply means that we sold some goods and we received some cash. So the two accounts affected are cash and sales. January 3, purchase goods on credit from T. Smith. The two accounts affected are purchases and T. Smith. The reason why we are using the name of T. Smith is because he's a creditor. We purchased some goods from him. We didn't pay him in cash or by a check. So we have to have an account for him so that when we clear off his account, we can have a record of that. The next one says January 4, paid salaries with check $4,000. Two accounts affected are the salaries account and the bank account, right? Salaries account and the bank account. The next one says January 4, paid salaries $10,000 cash. In this event, we are paying salaries in cash. So the two accounts are salaries and cash, right? Here they are, salaries and cash. The next one is January 5th, and it said bought property with check $10,000. The two accounts affected are property and bank. Check represents, check means bank, right? On January 6th, we bought machinery for check. So the two accounts affected here are machinery and bank, right? Check means bank. So as you can see, for all the transactions that we have done here, we are creating two accounts or we are making two postings for each. All right. Second set of examples now. It says January 7, bought fixtures and fitting for check $2,000. Two accounts affected are fixtures and fittings and bank, right? Here they are, fixtures and fittings and bank. On January 8th, it says paid water bill check $3,000. The two accounts affected would be water bill and bank, right? On January 9th, we received a loan of $1,000 check. The two accounts affected are loan and bank. Here they are, loan and bank. On January 10, sold goods on credit to M Block, $16,000. Two accounts affected would be sales, because remember that sold means sales, right? And M Block. If we sold goods to M Block on credit, it means that M Block is a debtor. He hasn't paid us by cash or by check, right? And so we have to create an account for him so that whenever he pays, we can also input that in, post that information in his account. The next one is January 11, and it says receive $9,200 cash, and this is coming from M Block. So the two accounts affected are cash and M Block. And on January 12th, we paid T Smith $4,000 cash. So two accounts affected are T Smith and cash. And so, remember, we're gonna put this information in his account to show that we paid him some of the money that we had for him. We also have January 13th, purchase goods on credit. S. James, $1,000. The two accounts affected are purchases and S. James. On January 15th, we paid S. James $500 cash. The two accounts affected are S. James and cash. And finally, on January 16th, we sold goods for cash. And here, remember, sold means sales. So the two accounts affected are sales and cash. So we have come to the end of this lesson where we looked at how we go about naming our ledgers, and this is going to guide us as to how we're going to be posting or posting the information into the accounts that you would have named. And if you look at it, you will see that the names are already there for most of them. For example, we have cash, we have sales, we have purchases, we have T Smith, we have salaries, we have check, which means bank, we have salaries and cash, and the list goes on and on, right? All right, so we are at the end of another session, and we will meet back at our next session where we look at how we enter the information that we have into the relevant account. All right.